So if you watch the channel, if you listen to the podcast, you know I'm all about trading rules, things to do, things to avoid. But today I'm going to talk about the top 5 things that I think traders are getting wrong, specifically in the post-2020, 2021 trading world. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, share these videos, and also check out the StocksToTrade team. It's something I'm very proud of. I do 2, sometimes 3 webinars every single day talking about trading rules, plans, breaking down fundamentals, chart patterns, the whole gamut of trading. So definitely check out the StocksToTrade team. I look forward to working with you soon. All right, today we're going to talk about trading rules and things you need to avoid, particularly right now. Keep in mind, I'm talking about 2021, which is setting up to be, if I'm recording in the middle of March, if like the year ended now, I still think 2021 would rank as one of the wildest trading years ever, and we got 9 months left to go. But that being said, a lot of these rules are specific to the market right now. They weren't necessarily true in the past. They might not be true in the future, but a lot of what successful trading is I talk about reading the room, okay? Recognizing what is working and what's not, and then acting appropriately. So that being said, let's get started. Number one thing I think people get wrong is falling for that mainstream media message. Keep in mind what the finance TV, what the news is trying to do. Everyone's heard that slogan, if it bleeds, it leads. They're trying to get you fired up, to get you to click that link, get you to watch that 10-minute segment. They're not trying to give you good advice, okay? What I try and do with the channel here or the podcast, I'm trying to give you good advice. I want you to succeed. I want you to grow. What the mainstream media is just trying to do is get you clicks, get you eyeballs. And the biggest reason I bring this up is I look back to a couple days ago. A couple days ago, market was pulling back. Tesla was red, Apple was red. Everywhere you looked was, stock market crash, inbound, tech stocks are over. They're all overvalued. And especially if you're a longer term trader or investor, you might have been scared out of a trade like Apple. Apple's bouncing back to highs. You might have been scared out of a Tesla or some of these other high-flying tech stocks that have been some of the best performers of all time, but you'd be scared out of that trade because of what that if it bleeds, it leads message is. Listen, one of the great things about YouTube, one of the great things about social media is you don't have to fall in that trap. Listen to the StocksToTrade podcast. Get on the daily pre-market prep. It's something I'm very proud of. Every morning, we're talking about actionable information. I don't do any of this fear-mongering stuff. I'm not trying to get you all riled up. What I'm trying to do is help you spot the best trade opportunities and ultimately execute on those. So the next thing I think people are making a big mistake on, and I know this is going to be the most unpopular portion of this video, but short selling. Yes, stocks go down, okay? I know the common theme is all stocks go up, okay? Yes, some stocks go down. Yes, some stocks close red on the day. Yes, some stocks have first red days and gap down the next day. But it's just there's so much more opportunity on the long side right now, okay? I'm not saying this was always true, but right now, when you look at a stock like ICE, just last week, one day went from $1.50 to 10. Then the next day goes from 9 to 15. Then the next day goes from 11 to 20 plus. You don't have to nail the whole portion of the move. You can have small position sizes, 100 shares, 200 shares. And if you're collecting $1 or $2 a share or $10 a share, there's so much more opportunity to these things. And on the flip side, you get these moves like this that are just so huge that if you're caught short, especially as a new trader, it gets bad really, really fast. If you look at ICE yesterday, it kind of closed down near the low of the day at 12 or 11.75. If you held that at 4 a.m., this thing goes from 11.77 to 26 at like 5 a.m. It's just bad. It's really bad, especially if you got a small account. It's going to get ugly fast. You're going to get trapped. You're going to panic, and you're probably going to blow up your account. That's the biggest thing you got to keep in mind. At least if you're on the long side of trades, you can be wrong. Stock starts fading. You can stop out and move on. If you're short, they go against you. It gets ugly fast. Okay? Next thing I want to talk about is having a plan. Okay? If you know me, you know I harp on this. But you have to have a plan because these stocks move so fast. And when I say plan, that means an entry, a stop, and a goal. Okay? I think a lot of people overlook that goal side. Well, number one, a lot of people always overlook the stop. You know, stopping out on stocks isn't fun, but it's vital. You have to stick to that stop based on the chart. Okay, look at your levels on the chart, break down breakout areas. You know, again, red to greens, VWAP, whole dollar, half dollars, all these areas we talk about, but also have goals. I mean, yes, it's exciting to see eyes go from 11 to 26, but you can see it's all the way back down today. You got to take those consistent singles with a small account. Because if you take, I mean, I know you're probably going to be like, yeah, no duh, but so many people have bigger losses than their wins. And even if you can have a good win rate, 70%. Say you have a killer win rate of like 70%. If you're taking those big losses, particularly if you're turning winners into losers, you're just going to struggle. I mean, because you have to make so much more just to get back to break even. Stick to those stops, keep losses small, and have realistic expectations based on that 3-to-1 methodology that I talk about all the time in the Steady Trade team. You know, every trade we look at the chart, we bring up the daily, we bring up the intraday, we look at these panic points, these euphoria points on the upside, and we base our trade plan off of that. If you don't understand that, we got a ton of videos. Steady Trade team is one of the best ways to learn that. Check out the link below. Next thing I talk about is it blows me away how many people avoid the higher priced stocks right now. I mean, when we've got stocks going from 10 to 20 to 30, 50 to 60 to 70 to 80 to 100, you know, if you're targeting the right stocks with StocksToTrade screeners, makes that all very easy. You're looking at the most liquid stocks with the biggest volatility. You don't have to be scared away from a $50 stock. Because again, if you've got 10 shares of a $50 stock and it proceeds to go to 60, 70, 80, that's not a bad day. Okay. So I talk about that rule of 10 in the Steady Trade team. So when I say rule of 10, we think of higher price stocks, like even a Tesla. I mean, Tesla is a great example. We often think of this stock as a $6 stock or a $5 stock or an $8 stock. In that situation, we'd say rule of 100. I just kind of shortcut it to rule of 10. But when you've got a stock like Tesla that, you know, look at when it breaks out back on New Year's Eve and goes from 697 to 879 in no red days, green every day for 2 weeks, and spikes, what is that, almost 40% in a matter of days on a low risk real stock. You got 10 shares of that, you're happy. You're very happy. You can have 5 shares and do okay with a small account. So look at the chart. Look at the daily range. Look at how volatile the stock is. Look at the liquidity. But I'm telling you, especially in 2020, now 2021, the OTCs have gotten super hot, they're really low priced. But back in 2020, man, some of the best trades out there were $20, $30, $40 stocks that would double, triple in a matter of days. You can really grow your account and you don't have to worry as much about those scary halts, the dilution events where you wake up the next morning, they did an offering, the stock's down 40%. You know, it's a little, always risk in every trade, but it's a little less risky in what I call these real stocks. Last thing I want to talk about is avoiding FOMO. It's an interesting point, but I tell you, this last year, ever since the shutdown came and day trading went wild and commission-free trading came in and just all these things, there's never been in my 15-year career a point where I can remember a time to have less fear of missing out, okay? This morning, literally today, Eyes was the big mover. Everyone was watching Eyes. Then 5 minutes later, look at Zila. Look at that VWAP hold high day break, okay? Breaks from 275 to 550. Well, actually, this was a dip and rip early in the day and a VWAP hold in the afternoon. INVO stock does a dip and rip, goes from 7 to 12. I mean, there's so many of these trades, so many stocks in play. Going back to that first point I had, have your entry, have your plan, and simply be okay with missing. I call it the bus station analogy, and I've been talking about this a lot in the last year or so. And when I say that, what I mean is if a stock blows through your entry or you're not quick enough, or maybe you go to the bathroom as fast as these stocks move and you come back and all of a sudden INVO went from 6 to 9 in the matter of a bathroom break, just know, wait 5 minutes, just like the bus, there's another one coming. Maybe 10 minutes, maybe an hour, maybe a day. I talk about the dark days of day trading. 2012, 2013, 2014. We used to wait days for a stock that went from 5 to 12, or a Eyes that went from 2 to 26, or a Zila that went from $1.50, I think this morning, or $1.50 to $5.50. We used to wait weeks for these types of moves. I remember FOMO was a problem back then. Right now, don't sweat it. Just know if you miss one, there's going to be another one in a few minutes. Stick to your process. Check all your boxes. Pick your clearly defined entries, exits, stops, and goals, and execute. And know if you don't get a fill, if you miss it, wait 5 minutes and there'll be another one. All right, everyone. Have a great day. Definitely check out the StocksToTrade team. I throw a lot of jargon out, talk about all these key levels, all this stuff going on. If it's a lot, if you're like, geez, this guy talks fast, a lot going on, you can either check out the past videos, or the best way is the StocksToTrade team. 2 webinars a day, every single day, live and interactive. I look forward to working with you.